The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody. This is Neil Green again with you on the webinar, just like every Wednesday, doing this webinar today about the Federal Funds Reserve interest rate in the United States, the biggest event of the year. Hopefully everyone, you guys from the GoToWebinar and you guys on Facebook Live can hear me and see the screen. Tell me if there's any technical problem just before we start to see that you can hear me and see the screen. Everybody can see the screen, everybody can hear me through GoToWebinar, and we're on Facebook Live, okay, on our FMFX homepage, just to know that we're in business. Okay, that's good. All right, so you guys on GoToWebinar, if you have any questions, anything you would like to add during the webinar, you're more than welcome to write me on the chat window. I would like to thank you for the emails you sent me during the week. Okay, it was lovely. I was trying to answer all of you, but I was all referring the big event that takes place today, and let's talk about this event. First of all, as you probably know, this is our fmfx.com. This is our homepage at FMFX. Okay. Of course, you can sign into your accounts. Join our webinars. Okay. All you have to do in order to join one of our webinars is click here, put in your first name, last name, and email address. And of course, it's for free. It takes place every Wednesday at the same hour, which is now. And I will talk, actually I'm talking for a long time, but I will talk every week on Wednesday. I'm talking about the events that takes place at the same week. We analyze the market together in order to give you trading opportunities to trade and make money. That's what we're here for. So, okay, so this is our website, fmfx.com. And you can join our webinars through here. And if you're ready, let's start. All right. Okay, everybody, welcome to our weekly webinar. Just like every Wednesday, this is Neil Green with you, talking about actually the biggest event of the year. Guys, today we have the interest rate decision in the United States, Federal Reserve funds, and let's start. You guys on GoToWebinar on Facebook, okay? Can you see me? Can you hear my voice? Just before we start, I want to do a technical check, and thank you for the emails you sent me during the week. Trying to answer all of them. A lot of emails you sent me about the biggest event in the market, which will take place today, the interest rate decision in the United States. This huge event. I'm gonna teach you right now how to trade on this event, all right? Because we're here to make money, and let's start. Okay, so this is our homepage, by the way, fmfx.com. Okay, Of course, you can sign in to your accounts through here. And down here, you can join our webinars through GoToWebinar. Okay, just click on join the webinar. It's for free every Wednesday at the same hour. All you have to do is put in your first name, last name, and email address. Okay, so we can contact you, and that's it. This is our homepage. Okay, FMFX, and let's start. So, trading the rate decision. Okay, the Federal Reserve rate decision will be published today at 6 p.m. at GMT time. So make sure you see what time is it on your clock. Okay, wherever you're from, since we have customers from all over the world. Okay, check what time it is. It's gonna be 6 p.m. GMT time. This is the biggest event of the year. Okay, the Janet Yellen press conference will start at 6:30 GMT. As you probably know, Janet Yellen, she's the chairman of the Federal Reserve, the central bank of the United States of America, which is the strongest economy in the world. Okay, and Janet Yellen, she's the head of the Fed. Okay, she's the head of the central bank. She's gonna talk 30 minutes after the rate decision. The rate decision will take place at 6 p.m. GMT time. 30 minutes after, for about an hour, she will explain her moves, okay? If interest rate went up, if it stayed the same, and so on. This event considered high impact event. So you're gonna see a lot of volume, a lot of volatility, a lot of money coming into the market, which means for you, it's gonna create a lot of opportunities, okay? And we're here to learn exactly how to take advantage of these opportunities for you guys. There's a 99% chance that the Fed will raise its rates based on the CME group. Okay, usually they're right. So how do you know it? You can go to investing.com or Forex Factory, whatever you like. Here I put it on GMT time. On GMT time, you see on 6 p.m. GMT time, we have the federal funds rate, 6:30 press conference. As you can see right now, the interest rate in the United States is 1%, and we're going to have the actual number at 6 p.m. today. It's expected to go up to 1.25%. Okay? Now let's see how it might affect or should affect the market. Interest rate is supposed to go up. Okay? Now, the current rate, as I told you, is 1%. It's expected to rise to 1.25%. Okay? Usually, you know what happens when interest rate goes up, the currency is getting stronger, the stock market is going down. This is what usually happens, and gold is going down. Now, let me try to explain you why. Think about it. If you have $100,000 or $1 million, and you want to know where to invest, okay, you can put it in the bank in a saving account, and then you're going to get the rate, right? Per year. Now, if interest rate is higher, it means you would prefer to put your money in a saving account in the bank, but you have to get it from somewhere. So you're going to sell your stocks on your portfolio and buy the currency. Put the money in a saving account, which means the bank stocks are going to get higher. Okay, going to be stronger. Higher rate is better for the banks. The bank give out loans. They give out loans. If they get more rate for the loans, it means the banks have more income, which is greater for the U.S. bank stocks. All right? So this would be the second time the Fed hikes in 2017. The first time was on March 16. Okay? The interest rate at the beginning of the year was 0.75%. Right now it's 1%, and we expect it today to rise to 1.25%. Now the last time Fed hiked more than once in the same year was in 2006. We're talking about 11 years ago. And I want you to understand, this is a new world, guys, okay? Till now, we never had more than one hike in a year, okay? The thing is, if you look at the market, right, open the MetaTrader, take a look at the market. Now, if I go here, let's take a look at the main indices in the United States. Look at the NASDAQ monthly chart. It's never been so high. This is the highest point it's ever been. Each one represents a month. This is a candlestick, okay, chart. S&P 500. Dow Jones represents the 30 companies with the highest value, the low tech. You see, the US market right now is at the best. Now we said interest rate goes up, the stock market chills a little bit, goes down, and the currency and the banks are getting stronger. So the Fed, the central bank of the United States, can balance between the stock market, okay, and the banks by playing with the interest rate. Okay, so this is what we're gonna see today, and Just wanted to show you the market. Now, current rate is 1%, expected to rise to 1.25%. Might be the second, we expect it to be the second hike this year, never happened since 2006. By the way, at the beginning of the year, they said they expect 3 hikes during 2017, so interesting. Okay. Sorry. Okay. Because the hike itself is priced, which means right now the market is priced as if from 3 days ago, since we know the forecast, right now the market is priced as if the interest rate was already 1.25%. 3 days ago, all the big websites, you know, the Fed, and all the analysts, what they publish what they believe, which means the forecast for today, which is 1.25, which means the market is already priced as if the interest rate was 1.25. Because the hike itself is priced, investor can check out future expectations. The first is if there will be another rate hike this year, okay? The information will be presented at 6 p.m. GMT time together with the actual decision, okay? You can see it on the statement on Forex Factory or Investing. If you didn't get to see it, on 6:30, you can listen to the press conference by Janet Yellen and listen exactly to what she says about future hikes of the Fed. Okay? The second expectation has to do with the Fed huge money base. All right? The Fed right now has more than $4 trillion in bonds. Are they going to sell it or not? That's a good question. We're going to wait for 6. Market reaction. Now let's come to our trades. How do we make money out of it? Market volatility has gained momentum in the past few days. A lot of money coming in. You have to understand it's the biggest event. A lot of money coming in the market, a lot of volatility, a lot of opportunities for us. There is movement from the technology sector to the banking sector. Okay? FANG, which is FANG stocks are Facebook, Amazon, Netflix, Google, all the technology stocks, and Apple are under pressure while US-backed stocks are rising. This trade-off could continue if the Fed raises expectations. Now, let me show you on the MetaTrader what happens these days, okay? This is the MetaTrader. This is the market. Now, if we look at, for example, let's take a look on, take a look. Right now, the US market is open, okay? Let's take a look on Facebook, for example. Daily, you see, monthly chart, Facebook goes up. Daily chart, look what happened 3 days ago. Facebook crashed down, okay? You're going to see the same thing with Google. Same thing, right? All the big these are the biggest corporations in the United States, okay? The biggest companies, technology companies. These companies has a lot of money, okay? Netflix crashing down, okay? 3 days ago, you know what happened 3 days ago? 3 days ago, we knew that the expectation for today for the interest rate is 1.25%, okay? After we knew that, the market started to react. Now think about it. All this big, look at Apple. Guys, look at Apple. Everybody knows Apple? Bam, 3 days ago, went down. The reason, okay? That's a good question. What's the reason? The reason. These technology corporations, these huge unions, what they need, okay, in order to finance their project is money. Where do you get money from? You get it from the bank. If interest rates supposed to go up, it means for the banks it will be more expensive to buy money, to loan money, to borrow money from the central bank. Now, if Facebook or Google or whatever company want to take a loan in order to finance, you know, whatever they need, it's going to cost them more. If it's going to cost them more, their profit will be lower. Okay, so people understood it. They took the money off the main stocks, technology stocks in the stock market. Okay, Facebook went down, Apple went down, they dropped. You see, the prices dropped, Google dropped, and so on and so on. And the money moved, you know where? To the bank stocks, because if interest rate is higher, it means that banks are going to make more profits because they're going to get better rates for their loans, right? If I'm a customer, if I'm Google, if I'm just a personal whatever, and I'm going to the bank to take a loan, I'll have to pay more if interest rate is higher. It's the price of money. So let me show you. JP Morgan went up in the past 3 days since we knew about the interest rate. Goldman Sachs, same thing, okay? Citigroup. So as you can see, in the past few days, we have a hike, okay, of the price of the U.S. And all banks, and you understand the reason now. Okay, so this is important just for you to get a bigger picture of what happens in the market right now. FANG stocks, we said, and Apple under pressure. This trade-off could continue if Fed raises expectations. Now, banks appreciate higher rates because technology companies find it problematic. Banks give out loans and make more money on higher rates. We just talked about it, right? Interest rate goes up, means banks will make more money. Currency is getting stronger. We're talking right now about the USD. The US dollar is supposed to get stronger. And banks give out loans and make more money. Technology companies desperately need money in order to finance operations, as we said. Apple has dropped around 7% since Friday. Okay, take a look at Apple. Take a look at Apple. Talking about 7% down, it's a lot. Okay, they went up, and then because of the interest rate decision, you see how effective it is. It affects the market very, very strong. FANG stocks, Facebook, Amazon, Netflix, Google, plus Apple have lost more than 150 billion. Okay, while bank stocks are making profits. The currency market will also react to the rate decision. The commodity market, including gold and silver, which are the metal commodities, should also be part of the trading portfolio. Okay, guys, what I'd like you to do, I'd like you to diversify your portfolio. Don't put all the eggs in one basket. Don't take only one trade. You can trade the US dollar, gold, silver, US banks, technology. Okay, you have to understand the correlation between them. Interest rate goes up, technology stocks are going down, currency is getting stronger, US dollar is getting stronger, US bank stocks are getting stronger. Gold and silver will go the opposite. Why? Because gold and silver has opposite correlation with the US dollar. They're kind of the parking lot of currencies. Usually when the US dollar is getting weaker, gold is getting stronger, and the opposite. Traders are recommended to prepare trading setups for all major assets. Assets to trade include technology companies, as we said, US banks, US dollar, and gold. Okay, and of course, good luck, guys. It's very important that you set your chart before 6 p.m. GMT today, before the interest rate. Put some key levels, put some support and resistance lines to understand how high or how low the price of the asset that you want to trade on might get, so you'll know exactly when to get off the trade. Okay, don't wait. All right, and of course, good luck. If you have any questions, I'm going to be here for you. You can email me. Hopefully from now on, every Wednesday, you can join us through here, join the webinar, and listen to us through the website. I was Neil Green. I would like to thank you very much. I'm going to be here next Wednesday. Take some good trades and good luck. Thank you for participating, guys. Bye-bye.